start right on 11.
Good.
Okay, we'll get underway. On behalf of Hort Innovation, I'd like to welcome the Australian horticulture sector and also participants across the supply chain to this year's webinar for the release of the Australian Hort Stats Handbook for 24-25. This is the 12th year that we've produced the handbook, and every year we seek to improve the data, increase the partnerships, and improve the way that we deliver the information to levy payers and also our members here at Hort Innovation. I'd like to acknowledge the work of Martin Kneebone from Fresh Produce, Fresh Logic, and also Lucy Noble and the team from Hort Innovation and our Insights group. Importantly, a big thank you to the industry itself. We collaborate with growers, exporters, packers, domestic suppliers, and also retail to really finesse and understand the data that we're collecting and to present it in a format that allows industry to make informed decisions on the continued growth of Australian horticulture. But before we get to the numbers, I'd like to acknowledge that this year has been a solid year for Australian horticulture, regardless of the size of the sector you're in or your part in the supply chain. We're seeing significant growth both in productivity, in the amount we're producing and the quality. And this year we see a considerable step up in our export value, up to around more than $3.5 billion. Australian horticulture now is valued at $18.4 billion, and we are within striking distance 2 years early of achieving our goal of $20 billion. We continue to feed not only Australians, with 96% of Australian food, fresh produce consumed by Australian consumers grown here in Australia, but we're also delivering some of the best high quality standard fruit and vegetables to our international partners. Our exports are around $3.5 billion, and that's a 13% increase on the prior year. Our exports have more than doubled over the past decade and are growing at around 8.5% a year, and that's well ahead of the growth we see in domestic wholesale, and shows now that exports are not just a nice to have or a side story, but they really are a structural growth driver for Australian horticulture. But when you step back and look at the data that Martin and Lucy and the team are presenting today, you can see that the mix of categories and where the growth is coming from is broad and deep. No longer are we relying on our top export crops or our large domestic provided categories. We're seeing growth across the board. The handbook is available online, and we'll share the details with you later. And I'd also like to point that later, towards the end of this financial year, we'll be releasing another edition of the Hort Stats Handbook that focuses on regional impact of Australian horticulture and drills down into the areas that industry has asked us to do more research on. So for our levy payers, our members, and those that are part of Australian horticulture, the next 45 minutes or hour or so is about providing you information funded by your levy to make better decisions and not only continue the growth of Australian horticulture, but we're mindful we're about continuing to improve the profitability of our growers to ensure that we have a sector that isn't just here at the end of this decade, but is building for future horizons. And that's our role here at Hort Innovation, is to work with the sector in partnership to deliver great R&D, of which this handbook is just one example. So to Martin and Lucy, over to you to introduce this year's HortStats Handbook. Thank you.
Thank you, Brett, for the introduction, and welcome everyone to this special online event where we will be launching the 24-25 Horticulture Statistics Handbook. The HortStats Handbook is the leading resource for the horticulture industry, and the launch of this year's edition, as Brett said, is the annual 12th publication for the handbook. The launch of the handbook marks an important time of year every year where we look back on the year that was and the horticulture sector's performance. So thank you so much for joining us today. I really look forward to spending the next 45 minutes or so with you all. Before we get started, some quick housekeeping as we go through the presentation today. Please use the Q&A function that sits at the bottom of your Zoom browser. The questions you put in will be available to us and we'll answer those at the end of the session. We'll do all attempts to get through as many questions as we can, but if we don't get to all questions, we'll endeavour to answer any remaining questions following the webinar today. Or alternatively, if you have any questions, you can also contact us always at communications@horticulture.com.au. Please also note that all attendees today attending the webinar are muted and we cannot see you. And finally, as well, the session will be recorded and will be posted online as well as sent around to everyone who signed up for the webinar today as well. So as Brett said, my name's Lucy Noble. I head up the Industry Insights team here at Hort Innovation. The Insights team, together with the support of specialist food market researchers and analysts at Kinetic, manage the delivery of the HortStats Handbook. And I'm very pleased today to be joined by Martin Kneebone, the founder of Fresh Logic. So with that, Martin, I'll throw to you to introduce yourself.
Thanks, Lucy. Thanks, Brett, for the introduction. Here we are outlining where we are for this particular year again, which is a great milestone in the course of the year. I look forward to sharing what insights we can see looking across it, and what by all accounts has been another very, very solid year. Structurally sound, I think, was the way Brett described it. I think that's right. We're in a good position. So thank you. Over to you, Lucy.
Awesome. Thank you, Martin. So over the course of the next 45 minutes or so, we're going to break this webinar down into a few parts. In the first section, Martin will provide some perspective on the handbook resource itself, looking at the origins, the methodology, and how the handbook has gotten to where it is today over the last 12 publications. After that, we'll get stuck straight into the data and all the good insights. While Martin and I today will be taking a look at some of the key insights from this year's handbook, it's always worth noting that the handbook itself covers more than 70 categories of fruit, nuts, vegetables, and amenity characters. So with both an online interactive dashboard as well as a PDF version of more than 400 pages of insights, it is an incredibly in-depth resource. And the reality is that we will only be able to get through a fraction of what's in the handbook over the course of the next hour. So I encourage you to seek out the handbook and use it to its full capacity and enjoy. So with all that being said, let's get into the first part of the session. So as I said, this is the 12th edition of the HortStats Handbook. When Hort Innovation first developed the handbook with Fresh Logic, it was really about filling a gap, bringing together reliable, trusted statistics for the sector as broad and diverse as horticulture. Over time, the handbook has continued to evolve as the broader stats environment has changed also, but the purpose has remained consistent and it's still focused on three things. One is around the reconciliation of industry data. The horticulture sector has breadth. It covers all states and regions, has a variety of supply chains and many different market pathways. And for that reason, the handbook plays a really important role in how we track, measure and plan for the industry as well. It's also around representing the whole sector. The handbook provides a really unified, comprehensive view of Australian horticulture rather than a set of disaggregated or disconnected data points and sets as well. And then finally, it's a practical resource that helps industry track trends over time and understand the overall sector and performance of the sector. A really exciting development this year is that the handbook has gone through a refresh and redesign. So the handbook PDFs have now been refined to make it easier to navigate and quicker to interpret. So I look forward to you enjoying that as well. And a big reason the handbook is a trusted resource for the hort sector is because of the methodology that sits behind it. How we pull together the data from across the supply chain and make sure it's consistent and comparable year on year. So to give you a bit of insight into that process, it's a good time to bring yourself into the conversation, Martin, to walk us through the approach of how we compile the handbook. So I'll now hand over to yourself, Martin.
Thanks, Lucy. through chain approach is the framework that we use, and in essence, what that requires us to do is to identify what's produced and then reconcile that all the way through the supply chain to the distribution channels. That creates a high bar because at each point in the supply chain, we seek to establish the value and the volume, but it serves to test assumptions. It serves to test the various sources of information that do come to us and validates. And over 12 years of doing it, our networks of support and people that PIBs and people that supply validation of these numbers at various points, and our own ability to zero in on every possible available data source and process it into a common form has matured and it's gotten better. And I think the capacity of the whole through chain system to add up this complex area of horticulture of 50 or 60 fruit and vegetable categories and lots of other parts of horticulture as well. I think it gets tested and ends up coming up with by far the most informed position we possibly can.
Martin, one question on this, because we know that the through chain model is unique to fresh horticulture. I don't think any other ag sector will have a data or statistics through chain model that looks like this. Can you talk us through what some of the key data sources that are used to inform the handbook as well? I know you touched on validation, but what else?
Sure.
What else happens?
Well, we access everything from levy information which guides us on what's produced. The export data is a very clean and useful set of data that's captured in a robust way. We have relationships with all the major processing receivals, and that books that information. We have eyes and ears through our association with AusMarket in the central markets that maps prices, and we pull that information back weekly. Imports come in through a trade data. And then we run a consumer panel at the other end that confirms for us what proportion of product they may be purchasing through retail and or eating out at food service. Now, that then gets tested with information sharing arrangements we have with major retailers and food service operations. And like I said, the underlying spine is that it needs to reconcile. We've set it up so that it's really not exposed to feeling the need to adjust one part of this model without having the robustness of reconciling with everything else. And that's really what you need in horticulture. It's so fast, highly perishable, and we have this contained market locally that competes with itself to some extent and is currently enjoying a solid structural growth in exports.
That's great. Thank you, Martin, for that explanation. So now we're going to move into the next part of the session, which is really looking at the statistics and what they're telling us for 24-25. We're going to start by considering some of the longer term trends, and then we'll go into specific categories performance as well. So looking back over the last 12 years, it's really clear that Australian horticulture has been on a real growth trajectory. Martin, we sat on this webinar and said a similar thing last year when we hit $17 billion. And once again, we're hitting another milestone with the sector reaching a record $18.4 billion in farm gate production value in 24-25. It's truly an incredible result, and it's a real testament to the resilience and momentum all across the industry and the breadth of the sector, which both Brett and Martin touched on as well.
Yeah.
The increase in production value of 1.07 billion, or 6% on the prior year, was led in large part by fruit, where production volumes lifted 3.5% to 2.8 million tonnes, and value increased 6%, up $424 million on the year before, with standout contributions coming from categories like avocados, table grapes, and citrus. At the same time, vegetables tell an important story this year. While volumes were slightly lower, overall vegetable production values rose almost 6%, up 317 million, and really a signal of the stronger returns in a softer volume year as well, which we can sometimes see across the industry. And nuts, They also strengthened with values up nearly 13%, around $188 million, led by almonds and a much stronger export result as well. Notably, this 24-25 year marks record high production values for fruit, vegetables, as well as nuts. However, there are two important caveats to keep in mind that I like to bring up at this stage. One is, as always the case in horticulture, the sector is a collection of many different industries. So when some categories are having a stronger year, others may be softer. And despite the headline results, we do know that a few lines did have tougher years in the 24-25 season as well. And second, and just as important, industry production value is not the same thing as grower profitability. What we report on in the handbook and what we'll refer to a lot today is farm gate production value. It tells us the value being generated at the farm gate, but it doesn't capture for things like individual farm cost. It doesn't spit out margins and it doesn't tell us about net profitability. And it certainly does not reflect cost pressures growers may be facing. So while the industry is generating more value overall, that doesn't automatically mean growers are better off. So with those things in the bag, the headline for the sector is still really strong. We're seeing strength across both large and smaller categories, which really speaks to that depth and diversity of the horticulture sector as well. It's also worth noting that the domestic market remains the backbone of the sector while exports continue to build, which we'll look at in a moment as well. Martin, is there anything that stands out to you here in terms of the key drivers this year's behind the record production value, and what do you think is most important to take away from a long-term perspective over the last 12 years?
Look, just the consistency of growth across all sectors, that's encouraging. Like I think you said in your closing comment there that export growth is good. Export will always be the highest value growth. It's going to be the best product. It's going to get the best price, and we've seen strong growth in that area. So structurally, it's in good shape. It's hard to add to what we've concluded in other years. It really looks like the setting that's been established and the investment priorities that have gone into various categories have been wisely made, and that's coming home now. It's coming home.
That's a really nice segue into this next piece when we look at long-term export. And this year, again, it's a real highlight and it's part of our bigger story as well. What drove the lift is really clear on this side. We can see that nuts were a standout in export, reaching $1.7 billion, which is up 22% on last year. And that's the biggest positive swing we're seeing in the export mix. Fruit also strengthened, reaching 1.6 billion, up 8% on last year, where vegetables eased slightly around 0.24 billion, which is down 5%. Importantly, export volumes also ticked up to 844,000 tonnes, which is the yellow line you can see on the chart. So it's not just about value. As you said, it's also about the volume that we're putting into export markets too. And I think what's even more important is what sits behind the single year result too, because when you zoom out over the past decade, exports have more than doubled, with the value of exports growing around 8.5% on average. And that's well ahead of the growth we've seen in the domestic wholesale market over the same period, which has risen by about 3.5%. So in other words, exports, as you said, they're no longer a nice to have. They really are a structural growth driver for the Australian horticulture sector as well. In terms of what's powering that growth, the big export lines still do a lot of heavy lifting, but the mix is gradually broadening as well. So what we can see is that almonds remain our largest horticulture export at around 1.3 billion, and we're up 23% on last year, with table grapes and citrus also major contributors. If you take just those three categories, they account for more than 70% of total export value. So they really do remain, I guess, the core export engine. However, at the same time, we're seeing categories take up a bigger share of exports than they did a decade ago as well. So, for example, I think mandarins are a really good one to highlight. They now make up 6.5% of fresh export value share, up from 3.5% 10 years ago. And avocados make up around 2.5% of export share, which is up from 1.5% 10 years ago. So I guess the point is just to say that the export base is also widening, and that's a really healthy sign for the sector's longer term resilience. Martin, I know you mentioned on the prior slide really around the importance of export, but when we look at these trends, what, I guess, changes stand out to you at a category level, or what do you think's been driving, I guess, both that scale mix as well as just the breadth and the broadening of the export mix as well?
I think the leading categories have set a wonderful blueprint for how to succeed with it. what citrus have achieved, what table grapes have achieved, the diversity of markets they service. I'm seeing 6 and 8, country-based markets of reasonable scale. The credibility of that and the fact that they are servicing these markets that have got nowhere near the same growth constraints as the domestic markets is opening up that growth to the industry here. We're doing what we're good at. We're doing what we have natural production advantages on, and the nuts have added to that. Particularly almonds have come in and enhanced that. We're always going to succeed more, I think, in nuts and fruit because of those hemispheric advantages. But I do believe that it's been the solid effort in table grapes and citrus over the last 10 or 15 years that's matured into a sophisticated, global, really marketing exercise that does well, coordinates a lot of product from a lot of different players, services a lot of markets. That's the blueprint, and we don't need to really reinvent the wheel. We look to replicate that or ride off the fact that the credibility of those products is very, very strong and growing.
Yeah, Martin, you summed it up perfectly. We know that these numbers, they don't happen overnight, and the path to export is really dynamic. So there's various factors that influence the ability to do this.
Yeah.
But the probably constant factor or variable is time and effort. So I think that's a really good point. All of that being said, these are truly just the headline figures for export, and I encourage you to refer to the handbook, which provides a greater deep dive into the trade figures for all of the industries and supports some of the nuances and the story behind what we see playing out within the export space at headline as well. So to build on that export story, I want to zoom out one step further. So far, we've been talking about exports mainly in value terms. This next slide that you're looking at is about trade flows in volume terms, the tonnes moving out as exports and the tonnes coming in as imports, because I do think it helps us see physically what's happening across the sector over time and is really important. So when you look at the long-term trend, the story is pretty clear. Export volumes have steadily been increasing over the decade, while import volumes have been trending down overall. On average, exports have grown at around 4.5% per year, whereas imports have declined at around 1.9% over the last decade. To put that in today's numbers, in 24-25, we exported around 844,000 tonnes of fresh fruit, vegetables and nuts and imported around 161,000 tonnes. A quick watch out on this slide is CAGR, which is the compound annual growth rate, is an average. So it does smooth out some of those ups and downs that we see, and it doesn't show the bumpy years where logistics, supply chain or market access challenges can really bite as well. And you can see that volatility in the trend line, particularly around those 2019-2020 years and around COVID. But despite all of that, the underlying picture is that Australian horticulture is shifting more product into export markets over time, while imports remain comparatively smaller and have eased across the decades, which really just speaks to both strong domestic capability as well as growing demand for Australian produce around the globe as well. And that sets us up nicely for the next slide, where we'll look at the full pathway, how much produce ends up in the domestic supply, how much goes to export and how much goes into processing. So one step further again, broadly, it shows the flow into the three pathways being supply, domestic supply, export and processing. Starting with the big one, domestic supply remains core. In 24-25, Australia supplied 4.25 million tonnes of fresh produce to the domestic market. And when you put that alongside imports, which are around 161,000 tonnes, it reinforces that Australian growers supplied just over 96% of the fresh fruit, vegetables and nuts consumed locally. That's actually about 1% higher as well than a decade ago, which is a nice reminder of how strong that domestic production capability truly remains, even while there has been that growth in export efforts as well. When we look at the longer term trend lines on this chart, you can see the different pace of growth across the three channels as well. Domestic supply has been growing steadily at about 1% per year on average over the last decade. Where the growth really stands out though is the exports. As mentioned on the previous slide, and as we've touched on quite a bit already, export volumes have grown much faster at around 4.5% per year on average, which is much faster than that domestic channel, which is why exports are increasingly showing up as that edge factor for growth for the sector as well. And then finally, processing has been relatively stable over the long run, growing at around 0.2% per year on average, which really just suggests it's a slower moving channel. And we do know it's often tied to longer term investment and capacity as well. So what we're going to do now is going to take a bit more of a turn into the detail around the year-on-year performance for the sector over the last year, stepping through each of the fruit, vegetable, nut, and amenity categories as well. Before we get into the handbook for fruit, I just want a quick reminder the handbook is a review mirror. It covers 1st of July 2024 to the 30th of June 2025. So very recent seasonal conditions won't show up in these numbers yet. But the story is already fruit had a really strong year in 24-25, with production value reaching a record 7.3 billion, up about 6% on the year before. This slide shows the top 6 fruit categories by production value and how they tracked over the last decade on the line graph. I know it's a little bit messy, but what it shows us is that in 24-25, table grapes sit at about 875 million, which is up 16% on the year prior. Bananas sit at 719 million, up 3% on 23-24. Avocados, 719 million, also up on the year prior. Apples at 672, down slightly on 23-24. Oranges are sitting at 542 million, which is also up on the year prior, and blueberries at 532. I think a call out to the combined berry cluster, citrus and table grapes, which make up just over 47% of total fruit value. If you then add in bananas, avocados, and apples, you're looking at more than 3/4 of all fruit value. And that's all to say that when we see movement in some of these bigger lines, as we have this year, that really does move the dial on that headline fruit result as well. So a couple of the stories that I think are coming out of this year's data, really, again, we can't not mention table grapes. They remain the single highest value fruit. And a big shift from last year is that table grapes have rebounded strongly in this 24-25 year after a softer 23-24. And you can see that really clearly in that trend line as well. Overall production volumes increased 23%, with export volumes increasing 31% on the prior year. Avocados had a standout production value year, up strongly in value, although volume did come back on the year prior, and this marked the highest ever farmgate production value year for avocados. Citrus remain a backbone of the sector, as you said, Martin, very much a big play in the export space as well, and they reached their highest record farmgate value this year at just over $1.2 billion, which is up 8.3% on last year, with production volumes also lifting. Oranges were the largest citrus driver, reaching 542 million. Mandarins reached 456 million, with volumes up. And lemons and limes hit a record 221 million, even though volumes did come back a little bit this year as well. Really, citrus, as I said, continued to strengthen on that trade side, with export values rising, which then obviously flows through to what we see here as well. Berries remain a long-term growth story. We say it almost every year. I think the combined berry cluster is now worth $1.4 billion, up from $679 million a decade ago. That's an increase of 103%, which really speaks to the growth of this category over time. The berry cluster, which includes blueberries, rubus berries, and strawberries, maintained its position as the highest production valued fruit cluster, and 24-25 marked its highest farmgate value on record as well. I'm going to pause there for a moment, Martin, but we've talked a lot about the big drivers like table grapes, avocados, and citrus, but also some of those smaller long-term success stories as well. From your perspective, I guess what's really driving the fruit story this year and what's changed most over the long term as you've been around?
Well, the table presents the export heroes and the bigger domestic market players. So it's just the same structural strength we're seeing, and we talked about earlier, really. I think it's just positive to see that long-term trajectory of value over time. That's good. I know that grower land is definitely dealing with cost issues, but if that line was a lot straighter, it can only be worse. So it's an echo of the table grapes and the oranges, and as you mentioned, mandarins, which have been quite an exceptional export growth product coming through. Avocados, with the highly sophisticated domestic supply chain that they have built and supply, and have this amazing consumption level with all the good things they do. not surprising that they contribute so strongly uh, to the value being where it is. Interesting that 6.1% of value growth, when we look at volume growth, um, the volume growth in exports was almost exactly what the total horticultural volume growth for fruit and vegetables was. So that's a really good sign that most of the volume growth we were getting was in the high value export markets, which, as I mentioned earlier, would be the highest product, uh, sorry, the highest price product and probably the hardest markets to service.
Yeah, thanks, Matt. All right, so this slide shifts slightly from biggest categories to fastest growers in fruit. And what we're really showing here is the top 6 fruit categories with the highest percentage growth in production value over the last 10 years, alongside the overall growth in fruit value across that period as well. So at a headline level, the total fruit value has grown from about 4.3 billion to 7.3, which is around 5% growth year on year. What's really encouraging here is that the growth leaders are not only the biggest categories, but several of the premium and emerging lines that point to really the diversification and I guess changing demand patterns as well. We mentioned the berry cluster on the prior slide, but specifically blueberries continue to be one of the horticulture standout growth stories. And in the most recent year, blueberry production value edged up just over $500 million. Production value of the blueberry industry has more than tripled over the last decade, and it's a great example of a category that has moved from that emerging category to more genuinely established within the Australian fruit sphere as well. Rubus berries have also grown strongly, reaching $319 million this year, with roughly 12% average growth over the decade. Again, another example of a structural expansion rather than those one-off spikes as well. Martin, you mentioned mandarins, and they're a really strong long-term performer, up to about 456 million in this year, and around 10% average growth as well. And the mandarin industry is a really good example of steady, sustained growth over time, supported by that healthy degree of exports as well. Cherries,
Yes.
although smaller in scale, are also a great example of a premium fruit punching above its weight. Cherries reached $301 million this year, with around 9% on average growth over the decade as well. And lychees also appear in the top growth list, although still relatively small at around $41 million. They show how diversification to niche premium fruit can really deliver that long-term growth off of a smaller base as well. And then again, it's worth noting that table grapes show up here too, even as large established category, they've still grown really strongly over the decade. So overall, this slide really reinforces that fruit story is not just about scale, it's also about growth in emerging and how that mix is evolving over time as well. We're going to jump into veg now. So looking at vegetables in 24-25, the veg industry reached a record $6 billion, which is up 5.5% on the prior year. And I guess an important note here is that while value increased for veg, there was a slight easing in production volumes. So on this slide, we're showing the top 6 vegetable categories by production value for 24-25 and how they've tracked over the last decade on the line graph. And what we can see is that vegetables have grown at around 4.5% over the last decade. And in 24-25, the top lines on the slide are potatoes, which reached over $1.2 billion. We have leafy salad vegetables, which reached $685 million, slightly down the year prior. Tomatoes rebounded this year, reaching $639 million. Mushrooms came back a bit this year, but still reached $338 million. The fresh herb cluster at $312 million, which is a really impressive 16% growth on the 23-24 year. And then onions value also came up despite volume coming down, and we saw onions reach $307 million as well. I think a few of the stories that stand out over the long term for vegetables, we've got, again, potatoes, they remain that highest value vegetable, and this year hit another record in value terms. So over the last decade, what we can see on the chart is that potatoes have lifted from around 660 million to about 1.2 billion. In the last 5 years alone, potatoes have led the field on the 5-year growth and continue to rise with both processing and food service channels really driving that strength as well. Fresh herbs, as I mentioned, they're a clear positive mover this year, up 16%. And over the longer run, herbs have lifted from roughly $120 million a decade ago to just over $300 million now. Leafy salad vegetables remain a major category for value. Performance was broadly steady this year, although they've grown from roughly 300 or mid 300 million range a decade ago to around $685 million now. Tomatoes continue to hold a strong position in the top tier, up 7% this year to about $639 million, while the tomato category has shown some volatility and challenges in the last couple of years. Overall, they remain consistently in that top value growth as well. And then finally, onion value did lift this year by around 5% to 307 million, although onion volumes were down by around 20,000 tonnes. And that does show up in exports, where we can see export volumes came back by about 20,000 tonnes as well. And therefore, export value came back by 22 million, which is 50% down last year. I guess longer term onions have moved from around 135 million a decade ago to the 300 million range today, even though, as we can see in a year like this, there is some volatility as well. If we look beyond the top 6 here, there are some really positive movers across the broader veg group, like in categories like vet lettuce, capsicums, and cucumbers that feature on that list of lines with improved value outcomes as well. Martin, when you look at the vegetable category this year, what do you think is sitting, I guess, behind those stronger value outcomes, despite obviously the slightly softer volumes?
What I see here is a mixture of staple products and products that have probably benefited from uh, portion management, and that as demand has welcomed smaller portions of product, the that leads to a positive impact on value. I think herbs have enjoyed that. I think now I think half of the tomato category volume at retail is in what are called snacking products, and this is demand. This is not a limitation on what's being made available. Consumers are choosing these products and they're shopping more frequently, and so they're welcoming the smaller portions, and that's helping them manage home waste. That's helped a lot across vegetables. There's more scope for that here. Fresh herbs particularly, and other categories closer to staple, onions, potatoes, and cost of living sensitivities are always going to get something of a lift, and that's what it appears to happen. Although potatoes to some degree have also benefited in the last 3 or 4 years from managing portions to better suit demand, and with that, a bit of value has been created.
Thanks, Martin. So now looking at nuts for 24-25, the nut sector recorded another strong year in value terms, with production value up around 13% to reach $1.66 billion, even though production volumes were down slightly, 7 to 8% compared to last year. Almonds remained the clear standout and the highest value nut. Almond production value reached 1.3 billion, which is up 20% on last year, or 218 million. And strong export performance really supported that, with almond export value also rising to 1.3 billion. Pecans are another bright spot. They reached their highest record farm gate value at 36 million, which is up about 50% on the prior year, with production volumes also lifting. Macadamias were softer this year. Production value eased to about 182 million, which is down 10% on last year, but volumes also we saw came back to seasonal conditions, which is a good reminder that even with a strong nut result overall, the performance can vary quite a lot by category as well. So as we look at other horticulture, which includes nursery, turf and cut flowers, we saw a stronger year in 24-25, with total production value up 4.5% to $3.4 billion. That's a good rebound from last year, with a long-term trend for nursery, which has been steadily trending upward over the last decade, with a peak which you can see over that COVID period as well. Growth was largely driven by nursery, which rose about $109 million or 4% to $2.8 billion, and cut flowers, which lifted 12% to $325 million. I guess when considering the growth of these industries in particular, one of the functions of the green life industries is that, unlike some of the fresh food categories, growth isn't really constrained by consumption limits in the same way, which partly explains the stronger long-run momentum we see in the trend line for nursery, and also the ability for nursery to pick up in years as well. So that marks the end of the category deep dives, and we're going to change tack slightly and look at some of our channel drivers and trends, which is very much a unique function of the handbook. So as Martin mentioned, one of the unique parts is the Hortstats Handbook is that the methodology accounts for the share of fresh produce going into supply into two channels, that being retail and food service. And that's really important context because over the past decade, the domestic market has continued to grow steadily, with retail remaining the dominant pathway for most fresh produce, while food service remains a smaller but really meaningful channel and particularly important for certain categories. This year's results also show food service continuing to play that important role, with the volumes going into the food service channel up slightly and sitting at a 5-year high. That's alongside some really strong retail performance as well. And on the slide, what we're showing is the top 3 fruit and vegetable categories that have the highest proportion of product, and I'm talking in volume terms for this slide, entering both channels. So fruit, overall, 86% of domestically supplied fresh fruit goes through retail and 14% through food service. So the fruit categories with the highest retail share, and those are the 3 categories sitting above the dotted line, are table grapes with 97% going into retail, kiwi fruit 94%, and rubus berries 92% into retail. The fruit categories with the highest food service share, those sitting below the line, are lemons and limes, 33% going into food service, avocados 26%, and muskmelons at 21%. So I think that really the food for the fruit channel story is pretty clear. Retail is the main game, with a handful of lines that are really much more exposed to those out-of-home dining and hospitality occasions as well. For vegetables, the split is a bit more balanced than fruit. Overall, 81% of domestically supplied vegetables go through retail and 19% through food service. The categories with the highest retail share are Brussels sprouts, artichokes, and broccoli and baby broccoli. And the categories with the highest food service share are English spinach, silver beet, and kale, fennel, and garlic. Martin, if I can throw to you, looking at this split and the way food service has tracked over recent years, and we've been tracking this now for 5 or 6 years, what do you think it means for categories with a high food service share, or how do you see this channel evolving over time from here as well?
I think food service has found its own demand profile that it can work with for various fruits and vegetables, and this is a direct reflection of what they take is they can use in menus and so on. And it's not surprising to see higher proportions of fruit like table grapes, kiwi fruit, and rubus berries that are highly occasion, discretion, impulse buy type things have a higher proportion in retail where the demand and the incremental sale for those products has got more potential. Whereas, below that, you've got the staples for food service. You're never going to have, I mean, lemons and limes are going into beverages. Avocados, an absolute staple in every lunch bar. Muskmelons, they're a very good value fruit that gets cut up. And so the difference between these things is largely framed by the way they are integrated into menus and the ease with which they can be. And so that sort of shapes the way that they've landed. At times, we're surprised, but at times there are opportunities because some things that may be low are low, perhaps because we haven't done a job of informing food service that how they could be used, and that's where some of the opportunities lie.
Thanks, Martin. And as we get into the final parts of the webinar today, I want to touch on some of the key takeaways and trends that we're seeing in the latest year, the data. It would be hard not to mention that really this year, the 24-25 year, marks a record year for horticulture. The sector reached $18.4 billion in production value, which marks the highest year on record. And importantly, that growth isn't coming from just one corner of the industry. It's a broad base with strength across fruit, vegetables, nuts, and other horticulture as well. Second, and we've touched on it a lot, but exports have stepped up again this year. Fresh horticulture exports reached a new high of $3.5 billion. And what's really notable is that export value has more than doubled over the past decade, pointing to long-term structural growth. We're still seeing big established performers leading the way here, but the mix is also continuing to broaden across commodities and markets as well. Third, domestic supply remains the backbone. In 24-25, around 4.25 million tonnes of fresh produce went into the domestic Australian channel, and growers supply just over 96% of the fresh fruit, vegetables, and nuts consumed in Australia. That's a strong reminder of the sector's importance to everyday Australians, not just economically, but also in terms of food security and supply as well. And finally, this performance reflects a whole of sector effort. It's growers, it's packers, it's marketers, it's exporters, it's industry bodies, and the wider supply chain. And it's also important to recognise the critical long-term work that sits behind the scenes. R&D, extension, market access, and marketing that really help lift that capability over time. And I think that's especially important because we all know the strong top line results can sit along really real cost and margin pressures on farm. And that's exactly why ongoing collaboration and investment really matters. I'm excited today to provide a brief look at a future development we're looking to release as part of the handbook. But before I do jump to that and questions, Martin, a lot goes into pulling the handbook together each year, and you've been working on the handbook for some time now. So is there anything you want to add or people you wanted to thank?
Yeah, I do. I have been doing this for a while. It's been immensely satisfying to have Hort Innovation support and do maybe create something that leaves a legacy of informing across the fruit and vegetable sector. I'd like to thank the myriads of people that take phone calls from us, me a lot of the time, particularly when they're in the middle of a busy pack out, and they still take the time to give me a response and help us make sure that we've got the numbers right. That's left me with a very firm view of the wonderfully authentic nature of those people across horticulture. And my team in here, the people at Kinetic that will pick this up and carry on with it, sharing, I guess, the release of the year's stats is a reflection of a huge amount of work, but also a very satisfying thing to be able to do. So thanks for all the support. Thanks for the chance to do it. This is the last time I'll do that. So goodbye from me. I've got a golf handicap I need serious work on. And thanks to you, Lucy. The last 3 or 4 years have been amazing in your ability to listen to some of what we've proposed, modify it, and enhance it, and roll it into a better delivery. So thanks, everyone.
Thanks, Martin. Don't go yet. You've got to help me answer the questions. But I think testament to your contribution to this project, to the industry at large, is really where we're taking it. And I've been sitting here for 3 years, and this development is one of my most exciting ones as well to be able to speak to. So quick call to action before I really explain what's here. If you're a levy payer or industry body and you haven't registered for HortIQ, please feel free to scan the QR code now, which will take you through to register for free to HortIQ. HortIQ is Hort Innovation's insight portal, a place where we're using to bring key data products together in a way that's easier to access and use. And this all matters because as part of an array of consumer insights, in the coming months, we will be releasing regional horticulture production estimates on HortIQ alongside some trade insights as well. A known gap in the hort landscape has been a consistent view of production at a regional level, not just national and state totals. So we're continuing to build on the really strong backbone of the handbook and make it an even more practical asset for industry, with regional production estimates showing the horticulture production across Australia, which is designed to really support better planning and industry decision making as well. This is going to be released and hosted on HortIQ in the coming months, so please sign up, keep an eye out for that. And with all of that, we're up to questions. We have received a number of questions I can see, Martin, but maybe to kick us off, I can ask you, Martin, stepping back from this year's headline numbers, does 24-25 look like a one-off bounce? I have a feeling I know what the answer is going to be, or are we seeing something more structural in the sector as well?
I think there's no doubt there's structural strength in the export growth. I think that's great. I think that we might have had some international market conditions in the nuts give us an advantage, but you have to be there for 10 years to earn that, and we were. I think I would, and we had some cyclical impacts. We had avocados on a low volume year, so slightly stronger money in that year, and that will level out. I would expect us to carry on that same trajectory that we saw over the last 10 years because of the platform that has been built. And let's hope they can draw on this information and inform those calls.
Thank you, Martin. And one more from me before I do hand over to others. Martin, you and I, we've spoken a lot about fresh horticulture. It's very different to other ag sectors. It acts very differently. It acts differently in the supply chain as well, less processing, tighter timeframes, more focus on quality. Can you talk us through how that shows up in the handbook data and why it matters for how we interpret the results as well?
Well, it shows up in the handbook data in the different volumes and values at the various stages of the supply chain. That's really where it shows up. That this amount of volume produced finds its way through to these channels, and it's valued at this level by these channels. We know that, for instance, the product going through to processing has got a completely different production profile and may end up generating a lower price per kilo, but the volume of it and the scale of it is a viable proposition for many players. So it's um, again, we deal with a short life perishable product that travels quickly, that has a limited life beyond which it's worth nothing, and that brings a pressure to sell. And so we deal with this contained market, and the ability to understand the supply and the price setting drivers and when to produce is really the name of the game. We do it well. We do it well for domestically, and now in the last 10 years, we've added the capacity to service serious export markets. We're a serious global export player in the categories that we have high volume in, and that's a great achievement.
Beautiful. Thanks, Martin. So to some of the questions that we have here, Martin, I'll throw to you for this one. Is the presented production value based on farm gate value, wholesale, retail value? If farm gate value, how is that value calculated from producers?
It is farm gate value, and it is calculated by establishing wholesale value and discounting back to farm gate value.
Beauty. And Martin, related question for export, where in the supply chain and what value is captured and reported for export?
It is the CIF export value that is the value for exports.
Right. And farm gate value, I've got a question here around waste. So presumably farm gate value does not capture production that must be wasted on farm. A producer must decide whether market prices are low and whether it's viable to send to market. Is this data captured anywhere, Martin?
No, all that we are able to capture at this stage is the product that leaves the farm and goes into the supply chain. That's uh, the only realistic data capture at the moment. The yield and the product that doesn't make that yield or saleable grade in any form, we don't have at this stage a system to capture.
Thanks, Martin. I'll just add as well for the waste component, there's a project that was completed by RMCJ last year. It was a cross RDC project led by AgriFutures, which looked to estimate waste for the agriculture sectors as well. As Martin said, that is a really hard one to capture, but it does provide an estimate of waste on farm for the different ag sectors as well. So suggest looking at that potentially as a starting place, but it's very much an area for opportunity as well.
Yeah, I think the data potentially around it's getting better. I think that you're getting good field bin data now in terms of weight, and field bin data really uh, reconciled with what's dispatched from farm is going to leave you with that amount. And I think they're getting closer to being able to quantify it.
Martin, I have a question here on, I think we've potentially touched on this. It was asked a little bit earlier, but where do you see the biggest opportunity across the sector for continued growth, both domestic and export?
Well, thanks for that. Look, more of the same in exports. The next rung of categories behind the successful ones, I can see a lovely level, a really good level of nectarines in the marketplace. And every time that we have had big success with our temperate fruits, it's been preceded by a flush of product on the domestic market. And that's because you've got to have it to sell it. You can't sell product into export markets without having the stock. And we've got it now. So I'd be optimistic if we're doing the marketing work that we can do that. Domestically, I think there continues to be demand for portion sizes that suit me. Households aren't getting bigger, they're getting smaller, and understanding that and managing that, understanding what needs to happen in the food service channel to, I think, make people aware. There's a lot of pressure on food service, on viability of businesses, and they've seen a lot of colleagues, a lot of businesses around them go, so they really can't leisurely explore something. They need a tight solution. And I think it's up to well, there's potential for the producers and distributors of this wonderful array of products we've got to help them with those solutions.
Martin, you did well with that one. It was a bit of a Dorothy Dixer, so thank you. Another question we have here is, Martin, any data on the main export destinations and growth in those markets over the last decade?
What was that again? Sorry.
Is there any data on the main export destinations and the growth in those markets over the last decade?
Yeah, that's there. I think that we identify the volume by market, which I think is a wonderful measure for the health and the robustness of the market, the markets we develop for exports. And those leading products are servicing 8, 10 different markets. So, and some of them have grown, but what I'm encouraged by is the diversity. They haven't become more concentrated. We have actually spread that range of markets we're servicing further. So good marks, good marks to, I think, to Jeff Scott in table grapes and to Judith Damiani, and then preceded by followed by Nathan Hancock at citrus. They've done a wonderful job. They really have.
And Martin, a quick plug as well to what we're developing for HortIQ, looking to increase what we have in there around trade data export insights is something that will be coming in the later months as well with the regional data. So very much keep an eye out for that, register for HortIQ, and that will be an interactive Tableau dashboard that does look at some retrospective trade data as well outside of the handbook. And Martin, just looking at the time, one more question I will ask. About how important is information coming from the levy collections, Martin? How do we use the levy collection data for the handbook?
Well, the levy collection data gives a level of income that is directly related to a multiple of production, a quantifiable multiple, kilos, cartons, units, etc. And it gives an indication of the volume. We don't use it in an absolute sense, but we have learned over the 12 years we've been doing this that there are relationships between the timing of the levy data and the timing of production, and that's the nature of sorting out horticulture. So it's one of the checkpoints we use to understand the changes in production volume, particularly. If levies collected the same consistent way, and I think they are, and they change from one year to the next, that's a signal, and we will look to reconcile what that change suggests through the through chain model, through the rest of the supply chain.
Well, thank you, Martin. And there are a number of questions and still more questions coming in. So as I said at the start, we will look to answer these and put them on the website as well so that we don't take up any more time because we've very much reached the end of our session. And I just want to thank Martin for joining me here today on the session in the last couple of years, sharing your insights and perspectives as well. It's always a joy and it'll be very different without you. As a reminder, the handbook is accessible via the Hort Innovation website. We will also be putting a recording of this session on our website as well as social media platforms, and we'll upload any responses, as I said, as well. If you haven't already, you'll be receiving a post-webinar survey, and we'd love to hear your thoughts and any feedback that you have on the webinar today. Thank you again so much for joining us, and we hope you enjoy the Hort Stats Handbook.
Thank you, everyone. Thank you, Lucy.
No worries. Bye, Martin.